Some think this young woman's small tailor shop only works with cloth and thread. Little do they know, something greater is quietly being pieced together.
Thank you. Kongsi. Bye-bye.
Girls, let's pack.
Boss, actually there's another job.
What? How can we finish it in time? Who is it for?
Oh, my best friend.
Boleh je. You go now and enjoy your reunion dinner. Go.
Go. You can come back tomorrow.
Silap-silap kita ni orang yang last kali rushing for Chinese New Year.
At least you got salary and job, ma. No complain, lor.
Less talking. Faster finish this lah. And don't forget, once this is done, we still need a design that can represent all of us, you know. We can make it, right? It's Chinese New Year, you know. This is so heavy and muddy. Why do you always pick the lotus?
I remember when I was a young girl, my mom told me that the lotus is a lot like women. Kaini? Maru? Amay?
Bos, ingat tak masa tu? Ada tak mampu nak bayar rental rumah. Tapi you datang.
Why don't you come work with me?
You showed me how to live with dignity.
I telah cakap berapa kali, kerja diam tak boleh bawa anak, Ma.
You can speak up for yourself.
There was a time I honestly didn't know how to continue living. It was you. You told me everything was going to be all right.
It'll be okay. Come, follow me.
And that has carried me until today.
We made it for you, the lotus. Because it was you who told us that
The lotus doesn't choose easy water to grow in.
Even when it grows from mud,
It keeps its beauty, untouched by what tries to hold it down.
It is you that reminded us, no matter how difficult things become, you don't lose who you are.
Thank you, everyone. In the end, the greatest wealth is knowing our true worth.
And that is the story of this young woman's small tailor shop that has been quietly helping hundreds of women piece their lives together again.
Hi, good morning. Welcome to Morning Kappa. Here we come to the week 4 of February with futures. Next. Before we begin, we'd like to highlight a brief disclaimer. Trading in futures and options involve a high level of risk due to leverage and may not be suitable for all investors. This presentation is intended for educational and informational purposes only and does not consist an invitation or recommendation to buy or sell any financial instrument. Please consult your licensed broker or financial advisor before making any trading decision. Now, let's take a look at the current landscape for our most popular futures product as we head into the new session. The US market, the Dow Jones, Nasdaq, and S&P has maintained neutral trading profile over the last 2 weeks, yet their overall trend remained firmly positive. And for Asian market, we are seeing strong sentiment in the KLCI and Hang Seng Index, both of which are carrying positive overall trend. In the metal space, we are seeing a green scene across the board. Gold and silver both show consistently positive trading profile and overall trend suggesting continued trader confidence. Crude oil remained in a neutral overall trend despite showing positive trading activity over the last fortnight. Natural gas remained neutral across all metrics. And for crude palm oil, we are currently observing a negative trading profile for both week 3 and week 4, keeping the overall trend at neutral. And for grain, while soybean oil is showing strong positive momentum, both corn and soybean are currently flagged with a negative overall trend, despite some positive movement in corn most recent trading profile. The recent surge in soybean oil prices is being driven by a policy-driven squeeze and weather instability in South Africa. Specifically, the market is reacting to the USDA 2026 outlook, which project a massive 17% increase in soybean oil use for biofuel, fueled by the full implementation of the 45Z clean fuel production credit that essentially doubled the value of domestic oil. As you can see, soybean oil now is forming a cup and handle pattern and is now breaking up for an upside. And for the S&P 500 has hit a patch of turbulence this week, retreating from its record 7,000 level due to a combination of a tariff turmoil and AI reality check. Investors are currently on edge following the implementation of a new 15% global tariff plan, which has reignited trade uncertainty and pressure export-heavy sectors. This macro anxiety is compounded by a sharp sell-off of a software and payment firm, triggered by recent research suggesting that rapid AI advancement could lead to a significant job displacement in white-collar sector. All eyes are now on NVIDIA earnings later this week, which will likely decide if the AI trade recovers or if the index enter a deeper correction toward the 6730 mark. Reviewing our performance from past week, it was a high conviction week where we saw 2 of our major commodities core hit their profit targets, though we faced a tactical setback in the equity market. So the first one is soybean oil. Our bullish call on soybean oil driven by a strong short-term momentum with initial investment of 2,310. We made an entry at a reference price of 53.5 and successfully exited at our target profit price of 57.25. This trade delivered a solid profit of 2,250 USD with a potential loss at USD 900, making this trade a 1 to 2.5 risk and reward ratio. The next call, we also saw a clean win in the energy sector as crude oil maintained its positive chart setup. The initial investment of this product is USD 474. We entered at reference price of 62.3. The market hit our profit objective at 66. We walk away with a profit of USD 370, representing a 1-to-2 risk and reward ratio. Well, we do not always win. Our short-term outlook on the S&P 500 did not play out as expected. While the long-term profile remained positive, the immediate negative chart setup led to a reversal. Initial investment of this product is USD 2,700. We enter at reference price of 6,880. Instead of moving towards our profit target, the price rose above our risk threshold of 6,920, triggering our stop loss. Hence, this resulted in a control loss of USD 200. Well, as usual, highlight of our briefing, the future market call. Building on last week momentum, we are looking at a stand-up performer with a positive overall trend on soybean oil. So demand remain aggressive and the tactical setup support further upside potential. And this trade require initial margin of 2,310, reference price at 58.9, potential profit price at 65, targeting a profit gain of 3,660, and a potential stop loss below 57.9, capping the potential loss at 600. The risk and reward ratio is 1-to-6. And we are running a trade, at the moment, we are running a trade with passion campaign now to reward the new traders. For those of you who are interested to open a futures account, please contact us or drop us an inquiry on the RHB Trade Smart website, and we shall keep in touch with you. That's all I have to share today. Thank you. Over to the next speaker.
Okay. Right. Morning everyone. Welcome back to Morning Kappa at 8. Thank you, Meagan, on the weekly futures update. So let's move to the Hang Seng Index futures. So just a quick catch up, right? You can see that the Hang Seng went through a strong corrections yesterday. Nevertheless, the Hang Seng remains intact above this stop loss point of 26,400. So hence, we still keep bullish bias on the Hang Seng Index until it reach this support level. So I think that for the Hong Kong market for the past 1 to 2 weeks, right, the relationship between China and the Japan has been quite tense. So market is actually paying attention to what will happen to these both countries. Nevertheless, while the discussions or development are still ongoing, right? What we do see is that there's actually a very strong interest on some of the defense related counter in both countries, be it the China as well as the Japan, right? So we'll continue to monitor this relationship between the China and as well as Japan. So looking at the yesterday, right, the overall market performance, right, we do see that most of the blue chip stocks have retraced. However, there's still a pocket of opportunities, especially like counters like 1138, Costco Shipping Energy Transportation. The counters have been moving uptrend recently, charting higher high and higher low. Yesterday, it break past the 18 Hong Kong dollar, heading towards 20 and 22. Downside support is 16. And then on, we have also seen one defense related counter in China called CSSC Offshore, right? Stock code 317, right? They also break past the 16 Hong Kong dollar 50 cents. Next hour will be 18.50 and followed by 20, and downside support is at 15 Hong Kong dollar. Okay, hang on. We just okay. So let's move to the Fed watch next week, right? I think this coming March will be the Fed interest rate decisions, and March is actually one of the very important meeting, right? We can see that as of right now, right, there will be no rate cut for this coming Fed meeting, still remain at 3.75. However, if you look at the full year of 2026, this Fed interest rate, right? This is actually quite interesting. From month to month, you can see that the market traders haven't decided yet what will be the consensus on the year-end interest rate, right? Previously, it was below 3, and right now it actually moved back up towards 3.25, right? So at this level 3.75, and also the year end at 3.25, right? So at a full year basis, right? Market right now, majority is thinking that there will be maximum 2 cut this year, right? The majority is how much? The majority is only about 33% of the total traders that actually trade on the options on this interest rate. Meanwhile, as I mentioned on Monday, right, that after the federal, Supreme Court ruled the Trump using of IEEPA unlawful, right? What happens that we're going to monitor on the 10-year yield. Okay, and so today I draw a chart. I'm comparing between the 10-year yield and as well as the 2-year yield. So what we do see is that recently the 2-year yield starts actually moving upwards. So between the 2-year and 10-year, there is actually a differential, right? And you can see that the 2-year is moving up faster than the 10-year, and right now the 10-year is actually moving downward. So it shows that what this actually shows that the market is actually selling on the short-term bond, and then they are moving to a longer dated bond, right? And that actually shows that so we try to find this relationship, and then you pair this relationship with the XPX index, and you can see that the this line, this is actually the 2-year yield minus 10-year yield. These are blue color line below here, right? It has an inverse relationship with XPX. So when this thing is actually moving downwards, generally speaking, XPX tends to be more bullish, right? So you can see that November, December, and some part of the January, the XPX actually moving up strongly. But coming into the month of February, when this blue color line start to actually move up, right, the XPX tends to actually have corrections. So right now here, you look at XPX, right, since we're actually moving into the February month, although there are some of the days the XPX actually move up, but generally XPX right now is still trading below the 20 and 50 days moving average. So if you're using this indicator, right, it kind of giving you a little bit of leading sense that you can see that the bond market is showing that traders will be a bit cautious, and using that will give you a little bit of an edge when you actually look at the XPX index. So whether the XPX will move up above this 2 moving average line, I think one of the key contributor, apart from the pricing of the bond yield, right, another contributing factor will be tonight, NVIDIA that is going to release their quarter results, and as well as their outlook for the full year basis. So I think NVIDIA is going to have their result after the market close. As of today, right, we still can look at some of their defense counter in the US, such as GE Aerospace. Yesterday, the market was quite erratic. It went down and then but it managed to close above 340, and next R1 will be at 360 and followed by 380. Secondly, we have the oil and gas stocks like Occidental that we mentioned on the Monday. Then on this morning when I wake up, I look at the oil and gas news. I realize that Chevron, the Bloomberg, I mentioned that Chevron managed to deliver their first shipment of Venezuelan oil, this refined oil, to the Indian buyer. So going down the road, I think for 3, 6, or even 9 months, definitely Chevron, if they do more export shipments, then on their profits should see on the upside. Nevertheless, looking at the technical, right, the Chevron have reached the R1 of 185, and on the upside, the R2 is at 195. So apart from the semiconductor counters such as the Nvidia and the Seven Fang stocks, I'll be looking at the defense-related counter as well as the oil and gas counter in the US market, right? And as for FKRI, the market still moving on the sideways consolidations. Nonetheless, we still keep bullish buyers with stop loss at 1690 point. On the FCPO, bearish buyers remains with a stop loss at 4250. On the downside, it could retrace towards 4000, or when selling pressure increase, it may extend towards 3850. As for Malaysia trading stocks, firstly look at Asia X, then break above 2 ringgit. Next level will be 215, followed by 2 ringgit and 25. Downside support is 1 ringgit and 90 cents. Secondly, we have Unisam, then jump above 3 ringgit and 15 cents. R1 is 3 ringgit 30 and followed by 3 ringgit and 45 cents. Downside support is at 3 ringgit. I'll stop here and I'll pass on to the next presenter. Thank you.
Hello. Hi, good morning, everyone. So today I'll be presenting on IOI Corporations on behalf of Liew. So yesterday, IOI Corporations has released their second quarter for 2026 results. And the first half 2026 core earnings came in within hours, but were above Street's forecast, which set 54% and 59% respectively of FY 2026 forecast. On top of that, IOI also declared an interim dividend per share of 5.5 cents. On FFB output, the FFB production rose 12% Q-on-Q in second quarter FY 2026, which is up 14% year-on-year. So it brings the first half 2026 FFB output growth to 8%. So this is well above our 3.9% projections and the management guidance of 3 to 5% growth for FY 2026 forecast. In 7 months, FY 2026 growth rose further to 9.5 year-on-year. So hence we keep our FFB growth assumptions for now, pending clarifications at the analyst briefing that will be held today. For CPO, average selling price, it was 4,198 ringgit per ton, which is down slightly year-on-year as compared to previous half, while palm kernel rose 30% year-on-year. On unit costs, it fell 4% Q-on-Q in second quarter FY 2026, which is around 1,754 ringgit per ton, which translates to 9% down year-on-year. So this brought the first half FY 2026 unit cost to negative 7% year-on-year. It's important to note that this is better than our forecasted 3 to 5% year-on-year rise in costs for FY 2026 at the back of high fertilizer costs. Moving forward, IOI is expecting fertilizer prices to rise by high single digit year-on-year after locking in 60% of its requirement so far. So with that being said, management guided for unit costs to remain flattish in FY 2026 on improved productivity to offset the expected higher fertilizer costs. Therefore, we make no changes to our estimates pending the analyst briefing today. On the downstream divisions, it remained profitable in second quarter FY 2026, although the margin moderated a little bit in second quarter. This was attributed to subdued customers' sentiment due to amid global trade policy, an intense competition coming from Indonesia. However, moving forward, I expect both segments to remain challenging, with the refinery segment also facing elevated inventory levels and intense competition from Indonesian producer. However, we feel like they may be upset in the short term by festive demand, as well as strong contribution from its specialty fats associated, coming from high cocoa butter equivalent margins, as seen as the associate PBT growth of 20% Q-on-Q in second quarter FY26. Therefore, we maintain our buy call for these stocks with the new TP of 4 ringgit 85 cents. We made minor tweaks on our forecast, like we update due to after we updating our in-house FX assumptions, we apply the latest export and levy duties in Indonesia, as well as we update the latest debt figure in SOP. Valuations remain attractive because LI is trading at 17 times of 2026 forward PE, which is at the low end of its peer range between 17 to 20 times. That's all for me. I pass to the next speaker.
Hi, good morning, everyone. Sorry to have a different view because my laptop has some technical issue. But anyway, I'm here to share with you the Solarvest result announced yesterday. So Solarvest announced their 9 months result yesterday with a core earnings of 60 million, up 81% year on year. And this came in within our and the street full year estimate at 77%, driven by ongoing progress of CGPP projects as well as the commencement of LSS 5 plant. As at 9 months FY26, the outstanding order book expanded 60% Q on Q to 1.5 billion, and this comprising 87% of utility scale projects and 30% of C&I and residential jobs. And following the result briefing yesterday, we understand that about 30% of the 2 gigawatt blanket order they secured, which is around 600 megawatt, will be subject to the 9% VAT subsidy cut. However, this impact is expected to be largely within the budgeted EPC's budget and mitigated by the strengthening ringgit, which is currently at 3.89, given that Solarvest submitted their LSS 5 bid in July 2024, when the foreign exchange rate was around 4.6 to 4.7. For the remaining 1.4 gigawatt, Solarvest will pass through or factor in the higher module procurement cost, if any, into new EPC's contracts or financial modeling in any new bidding. Again, in our view, that supplier default is unlikely because panel prices have been historically volatile without leading to a widespread default or precedent cases. And more importantly is that we understand that Solarvest has multiple suppliers who are top-tier China-listed manufacturers with a long operating track record with Solarvest. For these players, right, reputational, legal, and long-term relationship considerations are likely to outweigh any relatively small short-term financial upside, reinforcing our view that supplier default risk is low. In other words, Solarvest is not depending on a single supplier. So after all, we maintain a buy call with our earnings forecast and TP unchanged at 3.49 ringgit, given that the inline result. So we believe the recent steep sell-off is overdone and more than pricing any concern over the prevailing panel price trend, as Solarvest already fixed their panel price order earlier, and any supply default is unlikely in our view. Hence, in view of the strong earnings trajectory visibility and the project pipeline, we see current valuation of 23 times PE, which is around 3-year historical average, as an attractive re-entry point. I'll stop here for today and let me pass on the floor to the next speaker.
Thanks, John. Morning, everyone. So we have the results report on Petronas Gas. So Petronas Gas full year earnings just fell short of expectations of both ours as well as Bloomberg Street's. This is about 93% of our numbers. The main variance mainly due to higher tax rate in fourth quarter due to the non-recognitions of some tax allowance that we see in the previous year, and also increased costs at the gas transportation division, given that they have put in a bit more mitigation measures following the fire incident at their Putra Heights. But that said, in terms of dividends, they continue to pay out absolute dividends of 72 cents, which is flattish year on year. So they have been paying the same absolute amount for straight 4 years. And this translates to about 4% yield at the current price. For me, this is within expectations and also within the street estimates as well. But in terms of outlook, I think earnings for this year, we do things that earnings will improve. Again, because we do think the cost is mainly one-off. And also because crude oil prices have been coming down, we should improve their internal gas costs, reduce the internal gas costs. In addition to that as well, we also have seen the tariff hikes have implemented. That was announced for RP regulatory period 3 as well. But all in, we still maintain a neutral call on Petronas gas because we believe audience are well priced in. But they do still give about 4% yield as a support as well. But all in, I think within the sector, we still like Tenaga as a top pick, given that they also still give you a 4% yield, but there's also a further upside, given that the capex, contingency capex expand that they can continue to spend. So I'll stop here and then I'll pass on to the next speaker.
Right. Morning, everyone. Sorry, just now I didn't realize the screen was not shared. So over here, I just want to show you the this difference between the US 2-year and 10-year yield chart, right? Using this yield differential chart, I'll know that it gives me a little bit of advantage in looking at the XPX chart. So if you are looking for the direction of the XPX, right, right now you do see that the index is below the 20 and 50 days moving average. One of the key factors, the correlations is between this bond yield chart together with the XPX, and I do see that the relations is an inverse relationship. So when the line is actually moving upwards, the XPX tends to actually moving downwards. So right now you can see that this line is actually moving up. So XPX may not be able to break the 20 and 50 days. Another factors that I'll be looking at XPX tonight is the results of the NVIDIA, which right now you can see that NVIDIA is sitting above this price volume profile, right? We also mentioned about 2 or 3 weeks ago that this 185 to 170 is actually a very good zone for the bottom fishings on the NVIDIA, and it turns out to be true that 2 weeks ago during the Chinese New Year, that's where the NVIDIA came down and it bounced off here, and that's where it rebound upwards from the 185. So whether the NVIDIA will stay above this level also depends on their results tonight. So right now, the XPX index basically will be affected by the sentiment on the NVIDIA, right, as well as this bond yield differential chart. Okay. Now another thing that I also want to quickly mention is that right now RHB is doing a campaign, right? We have one Tesla Model Y, and then we have 12 iPhone 17 to be win. So every month we have one iPhone, and then the final winner will have the Tesla Model Y. So the campaign running from August 10 until 31st December of this year. Okay, so before I end, we have 2 trading stocks this morning. Asia X together with the USF. Okay, so thank you for joining us this morning. We shall see you again same time 8 a.m.